You probably think that real estate involves a lot of money to get started in, and we agree with that sentiment. You're essentially investing in houses, commercial buildings, and other forms of infrastructure. Typically, people would think that these things require a lot of money to get started, and they wouldn't be wrong in thinking that. But what if we told you that you can get in on it without having to spend your life savings on it? Is it really possible to invest in real estate on a budget? And if so, how? This is Intelligentsia, real life advice for practical and financial goals. Today we want to talk about investing in real estate, why you should, and how to invest in it. So let's get to it. Robert Kiyosaki once said that employees work because they're secure in their jobs and they're stable, which is fine. Everyone wants to have some form of security in their lives, and it just so happens that having a job streamlines the amount of security that you have into something that people, mainly your workmates, can relate to. You're familiar with that kind of security, and as a result, you're content. However, what you're making from your job is only a part of what you could be earning. This is primarily because workplaces often need to pay for other things like back-end processing, property leases, utilities, and many other things. As a result, what you're making isn't as big as it should be due to many factors that make sure that you're still employed the next day. Which isn't a bad thing since everything needs to exist in a system that works for the workplace environment. You're working for money because it's secure, but at the cost of working for less money, and you need to fit into a specific environment in order for everyone to thrive. We talk about this because the difference between poor people and rich people is that poor people work for money because it's safe. Rich people, on the other hand, they work for freedom. In his book Rich Dad Poor Dad, he talks about the 4 quadrants that make up people. You have employees, small business owners or specialists, investors, and big business owners. He emphasizes that big business owners and investors are generally the kinds of people that have the freedom to decide when they want to work and how many hours they should be working. They do this because they have their money working for them instead of the other way around, which is a smart thing. If you have the option to forego working and instead live your life at your leisure, it would enrich your life in ways that benefit you for years to come. That said, one of the ways you can go about this is through real estate. Everybody needs a home to live in, and having access to a market that develops a fundamental human need means that not only is the demand constant, it also means that you can rely on it for a passive stream of income. Let's start off with one example, which is house hacking. You've probably heard of house hacking before, but for those that haven't, house hacking involves owning a multi-unit property, living in one apartment, and renting out the others. People do this because the rental revenue can help you pay off your mortgage and other debts. So essentially, what's happening here is that you brought property that can house multiple people. As a result, you're making money off of rents, and you can then use that passive stream of income to pay for the mortgage. Now granted, you still need to have a lot of money to actually buy a house to do this. Some first-timers take what's called an FHA loan from the bank or a Federal Housing Administration loan. The FHA loan is a form of mortgage loan program supported by the US government. The goal of the FHA loan program is to make home ownership more accessible and affordable for people that might not qualify for traditional mortgage loans, owing to low credit scores, insufficient down payment funds, or other financial restraints. Generally, the people who apply for these are first-time homeowners to get them started on their properties. Another way to start off with real estate is through sweat equity. Now, it's important to note that you choose to not only invest money into real estate, but also your time and effort. What we mean by this is through labor, you're allowed to have a share of the profits when you decide to go through this method. Often, this includes construction work, renovations, repairs, landscaping, painting, and other forms of manual labor. If you're someone that lacks the initial funding to invest directly into a property, offering your labor and skills is also an option. Collaborating with investors often benefits both parties in the sense that you're able to get a cut without investing your money into it, and the other party doesn't have to do manual labor to get the property set up. Some cases involve house flipping, where you renovate an old house and hope to sell it for more than its current value. This is when you buy dilapidated houses and fix it up to make sure that it's in a livable state. Sweat equity can be a helpful option for those with limited cash wishing to get into real estate. but it's critical to approach it with reasonable expectations and a firm grasp of the effort involved. You're still required to be skilled enough to be able to perform construction work, and oftentimes that would involve years of mastery. Sweat equity activities, whether done with partners or on your own property, can result in increased property value and significant cash rewards. If those two don't fit your investment style, perhaps investing in REITs or real estate investment trusts may be more your style. Now, REITs are a form of investment method that allows people to invest in a diverse portfolio of real estate assets. They function similarly to mutual funds, and people are allowed to invest in a diverse portfolio of equities as a result. The main benefit we're looking for here is that you're not the sole investor in REIT investments, and you're crowdsourcing funding for a project or multiple projects. REITs allow investors to acquire exposure to real estate without having to personally own and manage physical properties. As with other forms of stock market investments, REITs assist you in the way that other automatically managed stocks function. You don't have to stress yourself out, think of it constantly, and you're secure in thinking that your money is working for you. REITs are generally diverse due to the nature of having a variety of real estate projects. You can have your pick of projects from residential, commercial, industrial, or retail properties. With such a selection of different types of real estate, you're fairly protected against any risks, and it's spread out. And because they're traded on the stock market, it's liquid and accessible, so anyone can just hop in and start trading. One other thing that helps you out in making sure that you're making the most money out of your situation is that REITs are required by law to pay out a considerable amount of their taxable profits in dividends to shareholders. This feature makes REITs appealing to income-seeking investors because they can deliver a consistent supply of dividends. They're professionally managed, so you don't have to worry about managing it on your end, and you're assured that they're handled by specialists who take care of property acquisition, management, leasing, and other operational aspects. Well, you have to understand that while REITs provide you the benefit of diversification and income potential, they're still vulnerable to the market's volatility and hazards. The value of REIT shares may rise or fall due to the changes in real estate markets, economic conditions, and many other factors. It's important to assess the risks according to your risk tolerance and research whether or not this is an applicable financial decision for you. Furthermore, the tax consequences and potential expenses associated with investing in REITs should be considered. Individuals can make informed investment selections based on their specific circumstances by consulting with financial advisors or tax professionals. Well, those are 3 ways that you can invest in real estate on a budget. We've talked about how you can get started with house hacking with an FHA loan. We also talked about sweat equity and the need to be skilled and the willingness to perform manual labor, and we've talked about investing in REITs and its reliance on the stock market. While there are many more examples on how to invest in real estate, these are just some that may be of use to someone starting off. There's no one way to invest in the real estate market, and you may be able to do more in the future. So feel free to try out what works best for you. If you enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you, and we're pumped to have you in our next video. Stay mentally healthy, and let's get financially fit together.